Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, October the 13th. The year is 2021. Let's talk trading. Where to begin? Part 3. These videos are for educational purposes only. Your results may differ from mine. Where to begin? Always, let's begin with our risk management. Let's make sure we don't lose any more in any one particular trade than we are willing to lose on a particular trade. Because it's not about each trade, it's about all the trades. So you can lose one or two or more trades, but so long as you come out ahead money-wise at the end of the session, end of the week, end of the month, that's all that matters. So I introduced you to the simple price action chart yesterday, and it says Einstein, but I really need to change that heading. Let's see. Let's just call it where to begin. Okay. So what we're looking at is some horizontal lines for the open high close for today and for yesterday. Now today we had news, red news, and I believe it would be 5:30 my time, 8:30 New York time. And if we drop down to the 1 minute chart, let's see, maybe we can see it, maybe we can't. Maybe 5 minute chart will show it. And I believe, yeah, here we go, right here. This candle. News came out and it dropped the price. Now, you're a new trader. Where do you begin? How would you trade this? Well, what's the candle color when it hit that line? That's the first line it hit. What's the candle color? It's red. You go short. And as you can see, if you would have went short at, let's call it 94, you had a low of 89. There's a chance to make 4 pips. Now, what happened next? You can see the candle was green at the line. It ran up. The line's 95. It only went up to 98. So there was a chance to make 2 or 3 pips. You got to be quick because this is news. Then what happened here? Price dropped down. You'd be short at, say, 94, low 87, chance to make about 6 pips. And so on. Now here, if you took shorts, you would have gotten your fingers burned. But let's look at the price action. What happened here? It pushed down, ran back above this line. This is yesterday's open. What happened here? It pushed up, and then it pushed back down further, but then it came back up, closed above the line. What happened here? It pushed down even a little bit further, but it came back and closed above the line. What is that telling you? We've had 3 closes in a row above the line. So maybe price wants to go which way? Up. And if you would have taken this trade and stuck in it, you would have been rewarded with about 40 some pips. And so what's happening right here? Well, you can see it just put in a new high in the last 5 minute bar. Now it's coming back off that high. So if it comes down to 37, what are you going to do? You would go short. And as you can see, first time it tried that level, it got bounced around. And it's because this is today right here. So it tried this level here, put down, It made it, but then it got put way down. Made it again, brought it down, up again, down, up again, down, up again. So looking at this price action, you can see here what's going on. Now, you've got a higher low on this when you look at the zigzag type motion. So it's telling you price is wants to go up, it looks like. But as I like to say, don't read your own press releases. Trade what you see, not what you think. Now, along those lines, we talk about planning the trade, trading the plan. I'm sure you've heard that one before. So what does that mean? Well, what it usually means is you want to look at areas on the chart where price is going to do something. Well, I know every day price is going to do something around the open. I mean, here we have the open, came through, got close, bounced off. So I know price is going to do something around the open. That's just the way price acts. And usually it's going to do something around the previous day's high or the previous day's low. And what is interesting here, the previous day's open is just slightly above today's open. And today's open is basically the same as the previous day's close, with the exception on Monday, because there's usually a gap between Friday and Monday. So when you're trading, this is what you want to do. First line encountered. So you just now brought up the screen prices between this line and this line. So if it comes down to here, you go short. If it goes up to here, you go long. Are you going to win every time? Probably not. Don't expect to win every time. That's why you have your risk management, because you're willing to lose so much on the trade. So you see this, you just take the trade without hesitation. So you get in at the price you want to get in at. And these spread dots are really close. And these are all indicators free to download. So let me put the bid price on the left. Whoops. Spread dots. Bid price on the left. And hold just a. I thought I had a real call. I guess that was one of those calls wants to sell me a warranty on one of my 20-year-old cars or something. My Miatas. Anyway, so I put the bid on the left, ask on the right, just like if you hit your Alt-T to get your bid and ask up over here, buy and sell. So you can see here, price went there and moved up, which, once again, is kind of to be expected, because we can see price has been doing that. So here, price touched it. Here it went up, but see, higher lows. So right now we got a higher low on that crossover. But you don't know what could happen. It could still slam back down. You don't know. That's why you put the risk on. There's nothing to guarantee a trade in. Like I said, there's those guys out there. Well, you could get whipsawed. Oh, what should we call those guys? I don't know. We'll have to think of a name. The whipsaw gang, I guess. So that's pretty much really, where to begin. Horizontal lines on the chart. Because as I mentioned in the other videos, just about everything is going to be a horizontal line or a price level, some point on the chart where you're going to want to enter the price. So here we're looking at the weekly, 29 pips above that weekly open, which was 36.11. So we obviously crisscrossed that. And today, you can see here's the open of the week. We went across it. We actually hit the low of actually the high of the monthly opening range. We broke out of the weekly opening range, but we came right back in. And we're right around the 36.41, which is the yearly open. So you can see here, price has been struggling to get above that yearly open, and we'll just have to see what happens today. And there's some more news today at 2 o'clock my time Pacific, and no, 11 o'clock Pacific and 2 o'clock Eastern. We've got some news, and that would be the FOMC. So we'll see how price reacts to that. So you could always take a chance here, put a trade on and see, maybe it goes up from here, maybe it goes down. You can take your pick. Or you could trade both ways if you're allowed to hedge, and you might be able to win both trades. It goes one way, you get out when you see it going the other way, and then it crosses that line again. So that's always a possibility. And right now we are 7 pips off that high. Inside bar, we broke above or broke into the monthly inside bar levels. There's the high, there's the low for the month. We haven't broken out of the weekly yet, which was 1 week ago. No pairs over 100 pips. Once again, compressed ranges. The buy zone definitely paid off here. If you were trading the early session, the Asian session, and then right here after the news, price got back into the buy zone, took off, came across the weekly open. So here's some weekly open trade opportunities. Once again, trading with the candle color. And somebody's going to say, well, what's your stop loss? It depends on your lot size and how much you're willing to risk. Remember, it's a function. It's an equation. It's a calculation. So the rat traders, you can see where the smart rat is putting the line. We have it at 15, but for the upside, it looks like it's closer to 19, 18. On the low side, it seems like it's just below 15 pips. And you can see here we're coming through that 41. There's yesterday's high. We're right there. You can see the wicks put in. And you just look left, you can see all those wicks where price is hitting and cutting across it. Pivot said near the pivot goes short. That didn't pay off. Well, it paid off during the news right there, but then it turned around and screamed to the upside. We took out the pivot. I know we took out the weekly and the monthly. We've seen that earlier this week. Wick zone. It was mostly wick zone, but price still managed to get in and out of the wick zone here. So those trades, but you had to be quick. You couldn't lollygag around and hope for big pips. You just have to take what the market was giving you. Oh, and on the dynamic support resistance indicator, I added a couple more lines, the push lines. And I'll have to explain what a push is later because I'm almost out of time. Fastest 15 minutes of trading is just about over. So, fellow traders, I hope that helps. And the posters on YouTube, I don't know how you're putting your replies, but I can't reply to them on YouTube because I can't see them. I don't know what you're doing. So you might have to find another way. Just remember, when you're sitting down at your trading platform, it's not what you trade, It's how you trade it. So go out there and drain the banks and click like, click subscribe. This is the Rumpled One over.